Good afternoon. How's everybody doing? Afternoon, Yotko, Peter, Evil, Steve, Monkey, Emac, Pop, DJ, Mark, Lewis here. Adrian, how are you doing? Excuse me, frog in my throat. Afternoon, Senji. So, Swiss franc. Big shock today. Bigger than I was expecting. Put it that way. So we'll have a recap this morning of what's happened this morning, of all the news we've had, and obviously we've got the monetary policy statement and bank rate coming up for the pound in 10 minutes. So we're not expecting a change here. This should come out as a 5.25. No reason why Bank of England will be changing the rates after what happened this morning. Who knows? So we'll find out. But unlikely we're going to get a change there. We might get a change in the sentiment towards rate change, though. So we'll have to watch this and see what happens. There's no press conference for this one today. So it's just the rate. So we'll probably get some volatility, some whipsawing, unless there's anything in the monetary policy summary that indicates a change ahead of June. I suspect we won't really get a strong sustained push on the pound, but we'll see what happens to it. Obviously today, as you can see by the ADR dashboard, wow, got to move over there. We're off the charts. Weekly ranges skyrocketed. We're 225 ADR pluses on all Swiss pairs, and we'll have a look at what happened with the Swiss this morning in a minute. Afternoon, everybody else. More likes, hit thumbs. Peter, didn't read your comment. What the hell? All my profits gone. I start to think that I just can't do this. I sound like an agony aunt. Although you are making money and the strategy is good, but is it me? I'm not making money. I lost 24k this morning. Blown. Bye-bye. Gone. So, yeah, no. We'll look at that in a minute. Yeah, but I mean, you're not going to survive a move like that on the Swiss franc that's unexpected after a 4-week squeeze. You have to get out. You have to just take the loss and kick it into touch. I've done it a number of times. You just have to take these on the chin sometimes. This is a losing month. In fact, this is going to be a losing, well, I've already posted in the Discord. This is a losing quarter. At the moment, we've got 9 days to pull back. So I'm about 8k down this quarter now, after today's moves, but unexpected. Euro Swiss, exactly. So we've got 10 minutes until the news. So we'll quickly whiz through what's happened this morning and last night. Not sure I can cover it in 10 minutes, but we'll start. So the FOMC statement last night, Fed fund rate didn't change as expected. No reason why they would be changing. Exactly the same as today. There's absolutely no reason to change here. Exactly the same as this morning. They did. They've done it before, which we'll go into. But yeah, so nothing came out of yesterday's FOMC statement at all that was of any real interest. So I did, if you're in the Discord group, I did a summary of what I think came out of last night's FOMC, which is nothing. So basically, Powell basically just said pretty much the same as everybody else has been saying, and what the Fed has been saying for the last sort of 3 or 4 months. We're data-driven, CPI, PCE numbers, etc., are all what's going to change interest rates. At the moment, we're bouncing. They're going up more than we thought. Therefore, we will be dropping rates in June as expected. But if this pops further, i.e. the next CPI release comes out and that CPI release is positive, not negative, there is a possibility that those rates will be pushed back from June to July, August time. But at the moment, business as usual. So what we got out of the US last night was a big drop, which I suspect you will find a V-shaped recovery. You can see it's underway already, a V-shaped recovery happening on that. So I got out of my US dollar CAD positions shorts into this propulsion gap as planned, gone long off of the RSI extension, and I'm playing it back up. So big drop on the news, but there is no news. It's not really a news event. Therefore, we should expect a V-shaped recovery on this news. So that's basically what came out of FOMC last night. Overnight news from Japan, radio silence. So nothing from Japan, no talk of intervention. They have mentioned, Ueda mentioned overnight, somewhere in here, or was it Suzuki? I missed that. Okay, fine. I missed this. I looked through this morning with slightly jaded eyes because I went out last night. But I looked through this morning, looking for any mention of intervention, and I was looking at all of this because Ueda was speaking, and this is what I focused in on. I completely missed this. Japan's Finance Minister Suzuki declines to comment on forex levels. Emphasizes stable movement on currencies, closely monitoring currency movements with a sense of urgency. I missed this. So whoever it was I just said into Telegram, into Discord, there isn't any. There is. Declines to comment on currency intervention. So they are still being questions about intervention, and they are still watching. So if that US dollar rallies this afternoon and that yen gets pushed up, there is still a chance that that's going to happen. I completely missed that. Should post in the Discord group because I said I didn't see anything on that. But there was mention, obviously lots of mentions from Ueda about what's going on with the yen, but nothing specific. But it was Suzuki that said it, so I missed that one completely. So there is still a chance of that intervention move coming on from the Bank of Japan. We've got 5 minutes still to go. So that was your overnight news. So this morning we had the New Zealand dollar, the GDP figures. GDP has shrunk. They were expecting GDP to go back up into positive territory. It didn't. One more of those, New Zealand is officially in recession. So that's not good for the New Zealand dollar, basically. So obviously, because it's negative news for the New Zealand dollar, it popped. This is exactly what this market is doing at the moment. Complete confusion. So we had, you can't really tell by the Swiss franc, obviously, but we had a little bit of a movement on the New Zealand dollar, but nothing much. So last night we had a kind of a whipsaw. So not really anything to write home about there from the GDP numbers, but that isn't looking good. Again, that's going to put pressure on them dropping that interest rate faster. So that is negative overall for Australia. We had the unemployment rate for the Aussies come down, which is fantastic news. That means that there is a possibility that they could potentially increase their interest rates if necessary, which you would find is bullish currency, as you can see. So we've had a move up on the Aussie because basically with unemployment is affected, and unemployment change is affected by interest rates going up, makes businesses cut costs. Main cost is people. They get cut, unemployment rises. So when unemployment is coming down, it means there is room to move. They have very, very high inflation. They haven't got quite as far as with interest rates as everybody else has. So now we've got the open door for them to increase interest rates, which makes what? Australia more bullish. So there is potential for a move, sustained move north on that one as well. So bear with me one sec. So that was the Australian unemployment rate. Then this morning we had the Eurozone PMIs coming out. So we had the French PMI come out. We had the German PMIs come out. All misses, negative euro. So this morning we've had the euro drop. So Big drop on the euro. That's with the Aussie powering up. Obviously, that's why that's 125 ADR, because the euro's been weak and the Australian's been strong. Euro CAD, we had a drop, but that's completely recovered. Swissy can't read anything into. Euro pound completely recovered. So the market dropped on the PMI figures this morning, rallying back up again. So again, kind of looks like that's a bit of a whipsaw. It's very hard to tell at the moment what the hell's going on, obviously, because stuff is moving all over the place. So got out of that one long on the news, shorted it out of the propulsion gap this morning, and I'm out of the short, which is nice. So nice load of profit on the euro US dollar there. So there's your euro news, negative. We've also got the services and manufacturing PMI combined. This usually comes out the same as the German and the French, which it pretty much is. So it's a bit of a hit and a miss there, all over the place, really. We've had the PMIs come out for the pound mixed today. So if you look at the pound so far today, and this is going to change in 3 minutes, the pound so far today, we've had whipsaw. Yeah, so lots of whipsawing on the pound, basically based off of the news. No direction, but you wouldn't expect this to move today because we're waiting for, in 1 hour, 1 minute and 50 seconds, for that rate to come out. So the market will hold off on any movement to do with PMIs until we know what that rate's going to be. More importantly, what that is going to be, which is the votes to change rates up or down. So with this number here, this is what you want to focus on. Assuming this comes out as expected. Obviously, if they change it, then this number means nothing. But the first number is how many voted to increase interest rates. The second number is how many wanted to decrease. And the third number is how many wanted to stay the same. So last time we had 6 wanting to keep it the same, 2 wanting to increase, 1 wanting to decrease. The forecast is that everybody will want to stay the same, but 1 person in the board will want to decrease the rates. So we should never see a positive number here. If we see a positive number coming out there, pound will rally. Unlikely, very unlikely. We're not going to increase interest rates. So that's coming out in 40 seconds. We'll switch over to watch the pound. We'll watch the pound US dollar while that's happening. And then obviously we'll have a look at the Swiss franc, which is the criminal today. Pound US dollar, profits last night. Good job. I've got one on. Hang on. 89. Let me just stick a trailing stop on that. So just put a trailing stop on my pound US dollar because that's in profit. Move my TP down just in case we get spiked down. 5 seconds. Morning, afternoon, Amy, Virginia, Michael, Florian, Brian. Okay, so push down on the pounds. Not particularly dramatic, that. I would say that we've got higher votes to decrease, so that second number being shorter than expected, I would imagine. Euro pound, 125 ADR, that's rallying. So it's definite drop on the pound, as you can see. Doesn't take a rocket scientist to see that. Just locking in a bit more profit. I've banked 4.5% today already. I'm going to do some DD control at some point as well. I was just waiting for this news to get out of the way so I can do the DD control. €150 euro pound. Sorry, bear with me a sec. I just need to change. Out pound US. Euro pound. Sorry, bear with me a sec. Weird. Why is that not in profit? That is that really that much swap on the euro pound? Bloody hell. It's not even worth trading. $215 swap on that position. I was just saying, I'm confusing myself. I'm looking at my trade manager dash, right? And I'm watching this position here being up here. And I'm like, where's the profit? It's in over $200 of profit. I've got over $200 of swaps because I've been holding it since January. This is one of the things I wanted to get out of today, ideally. Do I take that 1.3 and just call it quits? Is it going to push further? Right, let's have a look at the news. So we got the 5.25. We got the forecast as well. So as expected, just the one member wanting to reduce rates. So that is why we are coming down. But I don't think that's going to stay like that. Just want to get out of this range. I'm tempted just to take a loss on this. I've taken so much loss today. I'm reluctant to take more. But we'll see if this pushes further. Let's just see if the pound's pushing down anymore. This could go a lot further today, this pound drop. So I'm going to hold that euro pound. Right, so there is nothing there, basically. No interest rate change as usual. So I would expect probably some kind of V-shaped recovery on this over the next couple of days. Let's just quickly see if there's anything in the statement of interest. Maintains guidance from February's meeting. Policy needs to remain sufficiently high for sufficiently long. Not yet at the point we can cut rates, but things are moving in the right direction. Now fully expect fall slightly below 2% in Q2. CPI is now expected to fall slightly below 2% in Q2 due to the fuel duty freeze in the budget. Right, so what we're forecasting is inflation Q2 next year, I assume that means. It didn't actually say, did it? There's no way I mean, we're in... Do you mean this year, Q2? Interesting. So they reckon they're going to be down at 2% inflation target within the next 3 months. That I would be very surprised. But we may... don't know, maybe. If that happens, those interest rates are going to come down a little bit quicker, I would imagine. So basically, business as usual for the pound. There's nothing said so far in the statement that would say anything bullish or anything bearish. We're still looking at June for a rate cut, same as the US, same as Europe, same as everybody else. So what I would read into that is very little. We're obviously undoing this move on the pound US dollar. I would expect it to just do the same thing as usual, which is pretty much moving up, moving down on news and going sideways. So nothing really to report at all there. Just want to quickly check this US dollar CAD position. Going to close that out. Just closing out the US dollar CAD. In CAD. Well, fine. So I just want to check what I've got in profit. We've got more news coming up this afternoon, which we'll look at in a second. Okay, so Aussie New Zealand, I'm stuck in at the moment. It's getting a little bit hot. I've banked 5.39 today, so I've got a couple of stops. One of these is coming off today, and I'm going to take that off as well because the lot size is too high on that position. So I'm just going to take a little bit of loss off of this today using that profit. If it pushes any further. But we are at 125 ADR. We've had a reversal on the hourly, so I'm hoping we're going to get a little bit of pullback on this, but we'll see. That's the only bit of drawdown control I'm doing today at the moment. So there we go. So there's your news. Nothing much happened there, but I wasn't really expecting a lot, to be honest, because we weren't expecting that to come down. So this afternoon, in 20 minutes, we've got unemployment claims coming out for the US dollar. I'll still be on for that, I should imagine. So we'll have a look at the unemployment claims. 1:45 this afternoon, we've got manufacturing PMIs and services PMIs for the US dollar as well. So again, these are inflationary figures. So we will see what happens with these. These are, again, what the market is looking at. This is what the Fed is looking at, the PMIs, the PCEs, the CPIs, all those sorts of numbers, which basically tell them how inflation is going. And obviously, we're looking for all these numbers to keep dropping. If they keep dropping, it means interest rates will come down and that will weaken the US dollar. So these are very important figures coming up this afternoon. Unemployment claims, not quite so much. So you've got those two coming up this afternoon. We've got the Japanese CPI coming up as well this evening. This is going to start to become much more important now that we are using interest rates to control inflation in Japan. So we'll see what happens with that this afternoon. But there's two more news events coming up this afternoon. So what we'll do, there's not much point in looking at the ADRs and the RSIs today. As you can see, everything is off the chart. The market is going to be figuring out what to do now with the Swiss franc moving forward, because obviously they've dropped the ball again, as they've done before. And as I said, I can't remember if it was earlier this week or it was last week or both, I've been saying the Swiss are the ones which have the potential to move that interest rate unexpectedly and before the US. And they did it this morning, completely out of the blue. Bang. Killed everybody. A lot of banks and institutions will be offside on this now. So we need to wait and see what happens with the Swiss. But we'll have a look at what they've all done. So any RSI or ADR extensions you've got at the moment, I would kind of take them with a pinch of salt. If they're based on the Swiss franc, forget it. It's just any trading you do on the Swiss franc at the moment, you're kind of taking it into your... well, you're taking life in your hands, basically. As you can see, we moved roughly 300 ADR today. 30, so that'd be 90, 100-ish. 100 pips. So it's 3 ADR move today on the Swiss. So if we look at what the Swiss did, as I said, the Swiss have twice done this in the past since we've had the inflation changes. Yeah, they came out here in June when we were starting the inflation rally getting underway, and they just suddenly went 0.5% different to what was forecast without any explanation. Yeah, I always say in here, you've heard me say it before, the Swiss National Bank and Jordan never say anything. They are radio silent. They do not let any information out at all. Very, very, very tight-lipped on everything that they do. So they came out unexpectedly and moved that interest rate by 0.5%. And the market went, like it did today, total crazy move. So we then went through normal interest rate change, 0.5%. Everyone else was going in quarters and halves, so they were falling in line with everybody else. And they started doing everything that was forecast. Then they said, we're going to carry on going. And then they decided to freeze. Everybody else at this point was doing the same thing. We were all increasing our interest rates. Everybody else was doing it and sticking to exactly what they said they were going to do. They turned around and went, actually, nah. We had a massive drop in the Swiss franc. And then we stayed where we were. And you'll see that the Swiss franc interest rates, unlike most other countries, do not come out monthly. It's quarterly or ad hoc. Yeah. So the last change we had was in December. We're now in March. Previous one was in September. So we missed October. We missed November. We went to December. So they move in quarterly cycles, which is different to everybody else. And they don't tell us what they're doing. Yeah. So what's happened over the last few weeks, if you look at the Swiss franc pairs, is we've been gradually devaluing the Swiss franc. Yeah. So we've had this slow grind. You can see there I got out the Euro Swiss on this account. The ADR account, I didn't get out the Euro Swiss at that point. So that account's been hammered this morning. So we've been gradually selling this off. And I kind of said, there's a possibility this is because of the suspected drop in rates that could happen. Markets learn, banks have learned that you don't trust the Swiss. Yeah, they did it to us in 2014 with the cap removal, which I've pointed out many times in here before. The hell was that? There. Yeah. So this is the Swiss trading along quite happily. Oh, actually, we decided we're not going to peg the currency anymore. Didn't mention it to anybody. They just went, we're not going to do it anymore. Boom. Everybody liquidated, including brokers. Yeah. After that, everybody said, I'm not bloody trading the Swiss again. Never trading the Swiss franc. Never trading it again. What did everybody do? Go, oh, it's all right now. It's just turned into a normal currency. And multiple times they have done this to us where they just suddenly go, do you know what? Change their mind. And they hit the market hard. So it's one of those where every time this sort of thing happens, you think, is it worth it? Should I be bothering to trade this thing? Because they do it to us over and over again. They just suddenly come out of the blue and go, you know what? We changed our mind. And that happens. And you suddenly get a 300-400 ADR day and the thing collapses. Yeah. So in this case, or it rallies because they're doing something that they've not told you to do, basically. So the market basically factors in what it thinks is going to happen. When we get a news event with an unexpected result, what happens is the market goes, holy crap, we got that wrong, guys. And they have to correct the move. And that correction will be one way or the other, depending on what the positioning was. So banks and institutions move weeks before the news rather than waiting to move on the news. So they anticipate, they speculate what's going to happen, which is why when we get an unexpected result, we get a massive move because they're recorrecting the position that they thought they were going to be in. They're not in it now. So they either have to leverage into it more or they take profit on it because it was better than expected. Yeah, which is why you get these large spikes. So right now, because they've decided to drop their interest rates earlier than anticipated, obviously the Swiss franc has fallen through the floor. And that move could well continue to go and rally, basically. So we'll have to wait and see what happens. It could be that the market has factored this in, and this move that we've been seeing happening over the last 3 or 4 weeks was the market factoring this in, and this is the final hurrah, and then we're just basically going to undo that move. No idea. You have to wait and see what happens. That's all you can do is watch and see. So if you are still in any Swissy, I'm not. I'm out of everything. Apart from on this account, I've got a couple on the US. There's a possibility that does that. So this propulsion gap that is about to go in the next 2 hours, you're going to have a whacking great propulsion gap there. If you look at propulsion gaps on higher time frames based on fundamental shifts in news, you will find they often get orphaned. There's one there. You can't see it because it's behind the moving average cloud. But they will often get orphaned and left behind for weeks on end. Whether they actually get traded back into will depend on what happens with the news on the other currency. So we don't know what's going to be happening with the euro either. We've got that coming, yes, as well. So be prepared for that sort of movement and then absolutely nothing. So if you're mean reverting that move, as I am with the US dollar Swiss at the moment, you're going to get an opportunity to get out of it, because if it's pushing down and it doesn't continue to squeeze and rally, it will just do something like that, which gives you an exit. But if it does continue, it may not stop for a long time. Look at the previous shocks that we've had. Where was that one I just found there? That big one there. It's like, right, okay. Now we were selling it anyway, but you continue to sell it. So just be careful of this move. It may not mean revert at all. So I've got on at the moment on the Swissy, the exposure of is long basically on the Swiss at the moment. So I'm longing the Swiss franc. but on the Aussie Swiss and the US Swiss. And I'm going to be monitoring this very, very closely. So this US Swiss is one that I'm, as you can see, I've got stop loss set there. I will want to be exactly as I've done on the other account with the Euro Swiss and the Pound Swiss. If this does that, I'm out. I'm not holding it. I'm going to take a loss. I'm not going to hold this Swissy. I'm thinking about leaving the Swiss franc off the table completely for the next few months as well, because there's a good chance that they will continue to do this. What we've also had from the Swiss is unexpected rate changes. So they forecast every quarter. They suddenly come out and go, guys, we decided we're going to change the rates this month. What do you mean? We're not doing the rates this month. We do the rates in a quarter. No, we're going to do it this month. Yeah, so there's the possibility of that happening as well. If you look at the Swiss franc inflation figures, yeah, there is absolutely no reason for them to have any interest rate whatsoever. Their interest rate is higher right now, even after dropping it, than inflation, and inflation is coming down. So they have to stop deflation. We do not want that becoming a negative number, because that sends you spiraling into recession. So that's why they've done this, because they have no need to have high interest rates. The only reason they did it was to fall in line with everybody else. Yeah. And anticipating inflation skyrocketing. It didn't. They kept it under control. So that's why that's come down first. So up to you. Swiss franc, dodgy to trade, I reckon, for the next few months, because we could well have unexpected changes coming in interest rates. And it's the bad boy of the forex market in the fact that you can't trust them. We knew that, and I said it last week. It's like, not sure about that. I would expect them not to do it, but if anyone's going to, it's going to be them, and they have. So it's a difficult decision. Same with the yen at the moment. This negative move on the yen, it's always the same. All my back testing has all shown that the Swiss franc and the yen are the two currencies, as we know, that always go absolutely crazy, because they are safe haven currencies and their economies do not work the same as everybody else's. They've been running on negative interest rates. No one else has. Yeah. So if you look at the Swissy interest rates, they were running on negatives. You look at the Bank of Japan interest rates. Yeah. They were running on negatives. No one else runs on negative interest rates. Yeah. So they are very, very different. When there is a move and a shift in the fundamentals, they tend to go into those crazy, crazy, long, squeezy, trendy moves. So there's an argument for not trading them at all. And a lot of people don't. But I've made a lot of money out of them. They've just taken it back. Banks always do. So I'm thinking about what to do with the Swiss moving forward. One thing I am certainly going to do, and I'm trying to get out of some of this yen exposure at the moment, which is another thing I may well just take a loss on. I'm waiting to see what happens with this yen at the moment, because I missed that this morning about the Bank of Japan intervention. They are watching this. So this US dollar yen move, we've had the correction put in yesterday. So if this holds today and we start putting lower lows in, I think that is probably going to be the start of that rally on the yen. But we'll wait and see what happens with it. But if it pushes up above that level, I'm going to scale out of a lot of this yen. So what I've decided to do is keep my exposure levels back to where I used to be, which is 2 or 3 pairs maximum exposure. Rather than running low risk, high exposure, which is the model that I've been running this year, which I haven't done before, I'm going to go back to high risk, low exposure, and keep basically the exposure on the currencies back to where it was before. So the yens especially, and the Swiss, not going to go for more than 2 exposures maximum, possibly even 1. Yeah, if you're in the yen and you're in the Swiss and it's going to go into a squeeze, 1's enough, more than enough. Yeah. The reason I got into trouble on the ADR account and the hedging account was because I had pound Swiss and euro Swiss, both massively overexposed. And those are the 2 that I had to cut. And the hedging account, for those of you that aren't in the Discord channel, got cut automatically. Margin called it. They shut the whole lot and left me with $3,000. Brilliant. But that's because I wasn't doing drawdown control. That's another story. But anyway, so yeah, it's again, lesson learned. This market kicks you in the arse just when you think everything's going well. Bringing back to my document on the website. This is the stage where no matter how long you've been doing it, who you are, what goes on, that's the stage you get to, and you get cocky, you get over leveraged, you get overexposed, you think you can do absolutely anything, and then the market has a way of going, no. You get another one of them. Yeah, that's what the Swiss franc's done to me this morning. So exposure, just keep it limited, I would, on the Swiss and possibly the yen, but I'm still not convinced this yen move is not going to stall. So if we look at the yen and the all-time high, which we are off of today, this move that we've seen coming down in this reverse alert that we've got this morning isn't caused by limit orders triggering at that level. It was caused by FOMC. But it has coincidentally happened at the previous level that we did not go beyond. So if this reversal alert is going to hold and we're looking for a retest out the propulsion move that we got from FOMC yesterday, we shouldn't break above ADR today, and we should drop down. If we do break back above ADR today, I suspect this is just a flag in a new move up, in which case I'm out of the yen, because this is weakened unexpectedly off of the back of that interest rate rise, more than I was expecting it to. So, and more than most of the market. Two big shocks this week from the market. So, or to the market rather. So we'll see what happens. But as you can see, obviously we came off of this 90 level, which we've never been to before. And it's just coincidentally happened at that 152 point. So we'll see if this holds today. If it does hold, I get the feeling we're probably going to just restart a new leg down. Exactly the same as we did last time from this level. So this is where we are now. And this is where we got the intervention attempts by the Bank of Japan, those two. And then the Bank of Japan said at this point, if you push any further than this, we will intervene. And they pushed further. And as you can see, you can't quite see it. It's not very big, but there was an intervention move by the Bank of Japan there. That candle there happened in minutes. It was definitely an intervention move. You can tell intervention moves because the market basically does that in minute. It's 1 or 2 minutes, and it's an absolutely huge influx of money into the Japanese yen. So they basically liquidate a load of overseas assets or stock, and they basically just go bang, and they turn it into yen. The yen powers within minutes. So that is a small intervention move. So the warning happened here. They pulled away. They pushed further. The Bank of Japan intervened and said, stop it. They did. Yeah, and this is what tends to happen. The market then goes, yeah, all right. It's like poking the bear. Yeah. Eventually, the bear goes and bites your head off. So you don't do it. And that's exactly where we are now. So there's one of two things that's going to happen. Because of the new monetary policy stance that the Bank of Japan is now taking to use interest rates to control inflation, and it's got a long way to go. 2 more interest rates coming this year. They've already confirmed that. If it breaks above that level, it means that they've got a long way to go, and the market just isn't interested in zero interest rates. They want more. So if it does start to do that, it kind of becomes the same as all other currencies in the fact that it's just going to do normal sideways or grindy movement based on the other currency's strength or weakness. If what was said this morning is going to shock the market into listening, i.e. we are closely monitoring FX movements and we're not going to comment on intervention, meaning if you don't stop it, we will intervene. This is what I would expect to happen. So this is equivalent to FOMC yesterday. This is equivalent to where we are now. That is the propulsion move that I would expect us to sell out of. So if you look at where we are right now, this is the FOMC move. This is the propulsion move. This is the retest that I would expect us to sell out of. Yeah. So that move that we've just seen, which was a cascade effect, which lasted for about 6 to 8 weeks, is potentially what we have coming on the yen pairs. But this will be the confirmation this week. So we've got 2 more news events. We've got one coming up in 4 minutes, which is the unemployment claims, which could potentially push the market. And then we've got the manufacturing and services PMIs. If these come out as big negatives today, the US dollar will obviously start to drop again, and that will give faith in that US dollar yen move. But we'll have to wait and see. They've got to buy the yen as well. So it's whether or not the money comes out of the US and goes into the yen or not, which we'll have to wait and see. So it's going to be a tricky week to sort of forecast. I've got too much exposure on the yen, which I need to get rid of. So I'm giving it basically kind of the end of this week. It's this high. If that high goes, I'm just cutting it, and I'll use some of this profit to get out. So it's not going to be my payday this month or this quarter, in fact, unfortunately. So all accounts running new position trading EA? Yeah. Mostly. So the position trading EA is now running all the trades you see here, apart from the Aussie, New Zealand, the Euro Pound, and the US Swiss. There. So these three I was already in these with the market reversal alert CA. So the market reversal alert CA is carrying on managing these at the moment. So as these close out, I will switch these over to the new position trader EA. But I mean, I could switch them over now, but I've decided just to leave those running as they are, because I think I'm going to do drawdown control on them anyway, because the Euro Pound, not so much, because the Euro Pound, I think I can probably get out of fairly easily. The US Swiss, however, wherever it's gone, not as sure. As you can see, I think I'm just going to have to take a hit on this account as well, on this US dollar Swiss. But we'll wait and see what the news does. Obviously, if there's negative news, that will help. If it's positive news, I'm out. Because this Swiss franc weakness plus US positive news, this ain't coming back. This propulsion gap that's going in now on 4 hour there, I doubt we'll get that done. It'll just bounce off of it if it does, and it'll be gone. So I'll get out and take the loss. Exactly the same as I had to do on oil last year. I took a 9% hit on the oil account last year, and sometimes you just have to go cut it, because otherwise you're just going to completely hemorrhage cash. There we go. We're just moving now. We've got 38 seconds to the news. So we'll watch the US dollar Swiss for the US news. Afternoon, Kennelly. Bank holiday here in South Africa. Very nice. Watching the best stream on YouTube. It's not, because there's only 83 people in it. If it was the best one on YouTube, there would be thousands. Thank you very much anyway. Afternoon, Easy. Worth keeping basket of relatively non-correlated pairs? Yep. Definitely. Keep your exposure tight, as per Bootcamp. Here comes the news. Wow. Market paying absolutely no attention to the unemployment claims, which are as expected by the looks of things. 210k on a 212. So forecast, no deviation. Philly Fed won't do anything. So it's the PMIs at 145 this afternoon that we're waiting for. So no news there. So we'll see what happens. But if we break that high again on the Swissy today, I shall be getting out of this US dollar Swiss. I'm not sure if I'm going to get out of all of it. I probably will. I mean, there's just my average is beyond the trouble now with this is, look, you can see my average here. My average is 250, 275 ADR. The only way I'm going to get that average back up is with a very large aggressive drawdown control position, and I do not want to take an aggressive drawdown control position against the Swiss franc. So I just it's too difficult. First of all. We might get a double top. I mean, if I was going to do it, that is where I would do it. But I suspect if we do a rally and approach that level, we'll be going straight out the top of it. But we'll see. So yeah, non-correlated pairs. If you want to run non-correlated pairs, the best options are Aussie CAD, Aussie New Zealand, Euro Pound, Euro New Zealand, Pound US, New Zealand Swiss, US CAD, and US Swiss. Assuming you want to run some Swiss, that is. So if you run those pairs, there's only 8 pairs there. That gives you good diversification, limited exposure. It doesn't expose you at all to the yen either. And doesn't matter what's moving, there should always be something going your way, basically. But obviously you miss opportunities on all the other pairs. So, Euro odd, Euro CAD, if they suddenly got a nice level to trade from, you wouldn't be taking those. So the way that I'm going to be running now is, I posted this in Discord today. I'm going to go back to the way I used to trade because I've been trading this way for 4 years. Not had a problem. This year, since January, was the first time I've run multiple accounts with multiple strategies, and all very different strategies as well. And I've done all manual drawdown control across them all, and basically just can't run that many accounts. It's too big a portfolio to run and to keep your head around. So I'm going to go back to what I used to do, which is just running the one account. I'm going to put some more capital into this account. And I'm going to take manual entries with the new position trader EA. So if RSI gets extended beyond 80.20, the EA will automatically get me into a position because I will want to be in it. I like this. Other than that, I will be monitoring RSI and ADR dashboards, and I will take the first trades manually myself. And I will also be looking at other areas of interest. So if we suddenly hit this double top high there, double weekly high at 150 ADR, not on this. Oh yeah, no, it's Aussie CAD. I would do it on this. And we are really stretched. I'm seeing we're extended there. We're hitting this, and we get a nice little bear candle. I will get in, and that will then turn into a position trade. But it won't necessarily be just because of RSI. Yeah. So, but anything that is 80. There, I will be in it. One there as well. Yeah, just about to see that one. So I'm still going to run 80-20, and the vast majority of 75-25 RSI extensions, I will still take those as well, which is basically what I have been doing. But I'm just going to use the buttons to enter, basically just to get into the first trades, and obviously then just manage the positions as normal from there. But what that's going to allow me to do is have control over exposure. So I'm going back to high risk, 0.5% risk over 1 ADR, which is 0.25 over half ADR, which is exactly what I've been trading for many, many years. Same exposure, but same risk, but I will be limiting that exposure back down again. Yeah. So it's a good lesson every now and again to get kicked in the arse by the market, because it's those points where you get over leveraged. There's three reasons why people fail in position trading: entering too close together, using too big of an initial lot size, and exposure. Yeah, those are the 3 things that kill traders. What I was doing, running 3 accounts, basically with the same strategy, mean reversion extensions, was I was tripling my exposure. I just segregated my money out into 3. There is no way I would have taken multiple trades on the same instrument in the same direction with 1 account. So that's why it goes wrong. So I'm taking it all back to basics, which is how I've done it for years. So it's always when you change something, you will find, you find this in all strategies. When you change something, that's when things tend to go wrong. If you've got something that's been working for years and you suddenly change something and something goes wrong, it's because you've changed something. And that's what I've done. I've changed something. I've gone over to multiple strategies. I can't run them. I can't hold that many positions and manage that many positions. There's only a certain number of hours in a day. So back to basics. Just answer that one. SMB says they are prepared to intervene in currency markets. Yes. So that is something else that I noticed came out of Jordan today. like to see something else come out of Jordan. That came out wrong. We will adjust monetary policy again if necessary, which we know, without telling us. Cheers, Jordan. Thanks for the help, mate. And where was it? Somewhere in here, Jordan said, must have been earlier on. Yeah. We remain willing to be active in the forex market as necessary. And then there was one other comment I saw. I can't remember where it was, but it was basically along the same lines as the Japanese always say. We will intervene if necessary. Yeah. So this massive drop, obviously, in the Swiss isn't good for the Swiss. They're not going to be happy about it. So unlike the Japanese, they hold their own currency. So they haven't got the ability to just suddenly magic a load of Swiss franc out of nowhere. But they do have the ability to entice money into the Swiss franc. So it's a bit of an odd way of controlling, obviously, your currency. I'm just trying to find it. It's in there somewhere. We are not afraid to use SMB balance sheet measures if needed. You know, it's all kind of like threatening talk, isn't it? But yeah, basically the possibility of not so much an intervention, but some kind of strong move isn't off the table for the Swiss as well. So we could find them completely unravel this move. They've done it before. They will do it again if necessary. So we'll see what happens. But, you know, if you want to stay safe, trade everything but the Swiss franc and the yen. You can't really go far wrong. But with the Swiss franc and the yen, can hurt. So we will see. Can you please post to the Discord your new way of trading? I've just told you. Well, there's no. It's how I've watched the Bootcamp. Yeah. It's this. I'm not doing anything different. This is what I've been doing for years. Works absolutely fine. When I produced the Bootcamp, there was no EA. Everything was done manually. I'm not doing anything different. All I'm doing is monitoring dashboards, waiting for opportunities, getting into the market, hoping it goes my way. If it doesn't, adjusting price. But exposure, yeah, that's the thing that I had moved away from, exposure. And obviously with multiple account exposure, not just exposure, overexposure on a single account, overexposure across 3 accounts. It's further down his message, is it? Further up his message. Oh, I don't know. It's in there anyway, somewhere. No, it wasn't needed. I'm just trying to think of the word that he used. I can't remember what word he used. I was going to search for it. It wasn't intervene. That would have been the Japanese. I don't know what it is. But it's basically, yeah. I mean, they're kind of sort of threatening a little bit like the Bank of Japan do. And as we know, when the Bank of Japan threaten, the market listens. So we will see. Oops. Just want to watch what the Swissie's up to. Pushing again. Look. So there's no point in going through RSIs, really. Everything you've got on RSI is going to be Swiss or yen, mostly Swiss or yen related, as you can see. The only one that is not extended, like there's a few 70-30s, but the only one that is not extended massively, which is not Swiss or yen related, is this Aussie New Zealand. So the Aussie New Zealand is incredibly stretched. Let me just take this 90-10 off there. So we've got a very big extension on the Aussie New Zealand. So we've had lots of big news on both of these two, which has been contrarian to each other, which has obviously made this the perfect storm. Really good for the Aussie, not good for the New Zealand, all at the same time. Big, 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 strong moves. So we've had this like strong kind of trend started, and the Aussie New Zealand is another one of those that does this from time to time. If you were with me, not last year, the year before, I got stuck in a very big squeeze on the Aussie New Zealand. Got out of it, but got stuck in it. We'll have to go back a fair old way, I think, to find that one now. It was there. There it was. Whoa, where'd you go? Here. So, yeah, 2022, October, if you were in here in the live rooms back then, we got into the Aussie New Zealand somewhere around there and got stuck in it. Didn't get out on the exit opportunity there. Did get out on aggressive there, but wasn't a profitable trade. Well, I think it was actually. It was kind of a break-even-y one because the spreads weren't so big. Sorry, the swaps weren't so big. But the Aussie New Zealand can go into these kind of big, strong moves. And this is when there was a fundamental shift in the Australian interest rate, which we weren't expecting. And all of a sudden, it was like, holy crap. Interest rates, this is basically roughly around when the interest rates were all kicking off properly. So we haven't got that situation at the moment. So I would expect some kind of unraveling on this leg, but it's a big leg. Yeah. So it's kind of equivalent to this here, that there, this there, that there. Yeah, it's this sort of movement. We would expect some kind of pullback on this at some point, but it's squeezed at the moment, way above the 80 level. If we look at the previous 80 extensions on the Aussie New Zealand, there's one there, pop. There's one there, pop. There's one there, pop. We've got one here. Waiting for the pop. They're in, long, they're exposed. They need to take profit on the move. They will do at some point, but at the moment, pretty stretched. So again, on this one, I'm getting out of part of the position if it pushes up above 150 ADR. So this is as far as I want to take it. I'm just going to start doing drawdown control on it, basically. But I'm not going to get out. I'm just going to do some drawdown control because I've got two positions too close to each other. There was one manual in there and one automated. And again, this is the sort of thing that isn't going to happen with the new position trading EA or the position trader EA. I don't need to take these manuals because the EA is going to do it in a much more orderly fashion for me. When there's market structure, big strong moves where you don't get a reverse alert until you're all the way down there, that's when I've always had to put those manual positions in. I don't have to do that anymore because I'm not going to be using the actual market structure indicator, which its downfall is strong moves against it. You just don't, you have to wait an ADR for the signal. Don't have to do that with moving averages. So this sort of scenario is what this new position trader EA is designed to try and circumvent, which it will do. And obviously I've got the ability just to hit the button and take the trade anyway. So yeah, so I'm going to be watching that one today. Yes. Interesting day today. I'm considering keeping things the same, but just removing Swiss and yen. Yeah. Yeah. The problem I have, today out of the equation, because this was, again, another completely unexpected. This move that we've had on the Swissy, this is the first time this particular situation has ever happened to me where I am in a multi-week squeeze and then a fundamental shift goes against me. What normally happens is when I'm in a multi-week squeeze, it's because of a fundamental shift, not because of anticipation of a fundamental shift that actually happens. This sequence of events, haven't had it before. So when I look at my P&L before today, going back years, I've made loads of money out of the Swiss franc. I've made loads of money out of the yen. Yes, I've had some big squeezes on them in the past, but they've been profitable. So for me, it's difficult to remove them from my portfolio because I'm profitable with them. Unlike gold, which is why I don't trade gold, because that has proven I'm not profitable with it. But right now, because of what the Swiss franc has done again today, and now what's happening with this yen, this yen is a situation I've never experienced before. Since I've been trading like full time, I've never had anything but negative interest rates on the yen. I really don't actually know how to handle this situation with rising interest rates and negative strength. It's abnormal for me because it's not what normally happens. So there's a reason there for removing the yen from my portfolio specifically, because I'm not 100% sure exactly what's going to happen. I'm waiting for an indication that the Japanese are still going to have intervention as one of their tools. If they have, I don't mind. But I'm certainly not going to be buying it, buying everything against the yen. I would only sell it. Sell against the yen, obviously, so buying the yen. If that isn't the case and we push above there and the market proves that the Japanese have run out of ammunition, I don't know what's going to happen to the yen moving forward, because now we've got an instance where you've got 5.5 interest rates running against 0 interest rates as a differential. There's nothing this can do but go up. Even if the US dollar was to weaken, this should still go up. So I'm really not sure fundamentally what would be the best thing to do with any yen pair if that happens. If it doesn't happen and it all starts to come down, not a problem, because it's proving that it's just turning into another normal currency. But other than that, there is an argument for removing the yen. There's still plenty of FX pairs. If you remove the yen, you're removing 1, 2, 3, 4, 5, 6, 7 instruments from 28. You've still got 21 instruments left. Yeah. If you then remove the Swiss, you're removing 1, 2, it's already gone, the Swiss yen. 3, 4, 5, 6. Yeah. So you're removing another 6 from that 21. So you've still got 15 instruments left to trade. That's plenty. And that gives you exposure on all major currency pairs, apart from the safe havens. Yeah. So when World War III kicks off, the yen going through the roof, the Swiss franc going through the roof. If you're the wrong direction on those, you're dead. We know it. Yeah, it's going to happen. We don't know if World War III is going to happen, but we know that they are the safe haven currencies. So this is why people exclude those two, because they are the safe haven run currencies. The US dollar is also, but the US dollar is a major cross with other pairs. So after that squeeze has happened on the safe haven run, they will get undone by the strength of the other or the weakness of the other currency pair. Whereas trading something like the US dollar Swiss or the US dollar yen during a safe haven run, there's a possibility it just doesn't stop, which we know, we've seen it happen. US dollar Swiss, again, is one of those currencies. My worst ever squeezes, US dollar Swiss, Aussie, New Zealand. Worst ever squeezes. Now, Euro Swiss, Pound Swiss. Swiss, what they all got in common, the Swiss franc, Aussie, New Zealand's not. But, you know, it does cause problems every now and again. So there is an argument for excluding it. 15 currency pairs is more than enough. Yeah, you look at all the other currency pairs out there. Yeah, there's plenty of opportunities to get in on a monthly basis. You're going to get multiple signals to get in. Yeah. So this is looking, going back to December, 1, 2, 3, 4, 5, 6, 7, 8 opportunities in 3 months. Yeah. You're going to get 2 to 3 positions a month out of most instruments. 1 to 3 if it's tight. Yeah. You're going to get multiple support resistance bounce opportunities to get into positions if you want to as well. So removing the completely unpredictables from the equation still leaves you with 15, plenty of opportunities. In fact, that's something I might do. What I might do is run my P&L through Strategy Quant and remove all the Swiss and yen pairs and see what the result was, i.e. number of trades, profitability. It's not a bad idea, actually, because that will give me a really good indication over the last 6 to 12 months what would have happened if I hadn't bothered trading them. So, but, you know, it's a personal decision and you need to make. A lot of people, as I say, don't trade them because they are, you know, unpredictable. We know they are. Just by the nature of how they run their economies. They don't run their economies the same way as everybody else's. They've always used negative interest rates. So, God bless you for giving away so many quality materials free. No problem. I'd love to monetize my knowledge. I just don't get enough viewers. If you saw my YouTube earnings, I could just about pay for last night's meal. The Aussie squeeze. Yes, the Aussie squeeze. That wasn't fun. But again, it's the perfect storm. This is where people get stuck with trading in general, but specifically with position trading. Understanding that the fundamentals are what is driving. If you can get the fundamental direction half right, you're okay. Or if you can identify something that's about to go crazy, you're okay. Things like this, you can, banks can't predict this. There's a lot of, I should imagine this morning at 8:31, it was like a scene out of some horror movie in most FX bank floors. It's like, what do you mean they dropped the rate? Type, holy crap, liquidate. Yeah, this is what the spike is. It's like, out. What did you lose? No idea. I haven't looked at it yet, but I'm not in it anymore. That's what happens. This is why these spikes occur. It's like, they've shafted us. Because don't forget, the banks and institutions are expecting something to happen. They're planning something to happen. That's why the market's moving, because they're speculating what the outcome is going to be. They still don't know the outcome. Yeah, they're human beings like everybody else. They've got a bank full of analysts sitting there getting paid 150 grand a year each to tell the traders what they should be doing. But at the end of the day, they don't know. So, there will be a bloodbath everywhere off the back of that move. A round back test on gold, 5-minute time frame, taking market reversal alerts with a quarter of an ADR TP and 1 ADR stop loss, risking 2%, and multiple tests came back with big gains. Drawdown was constantly around 7 to 15%. Only 2 positions max on longs and shorts. The ones that hit stop loss usually took a few days to play out. But even those days it hit stop loss, it was less than 5%. The only downside to that is when gold, I haven't got gold here, but when gold goes into a squeeze, you will hit stop loss continuously, surely. And at 1 ADR, so basically you've got a negative 4R on that. So you're basically taking, let's say, you've got 1 ADR stop loss and a quarter ADR TP. Every time it hits your stop loss, you've got to make 4 trades back. So if you hit stop loss twice, you've got to get 8 positive trades on the 5-minute time frame to make money. Negative VAR strategies, they do work, but I'm not sure if it's sustainable. If you're risking 2% as well, how many trades would it take a day? Oh, I see. So if I'm thinking if it hits the stop loss, I stop trading that day. I don't know. If the back test says it's profitable, then do it. But what I would say is run a system parameter permutation test on it as well. So where you're testing 1 ADR as a stop loss and a quarter of an ADR as a TP, test variations of that. So instead of using 1 ADR, use 1.1, 1.2, 1.3, and 0.9, 0.8, and 0.7. So give yourself a deviation of about a third or a quarter-ish. And with your TP, use a 0.25, a 0.3, and a 0.35, and a 0.2, maybe. Just go down slightly on the TP, just to show what would happen if you... Because what's going to happen is you're not going to get those exact entries. And those stop losses are not going to get hit at exactly those levels. So you need to test the deviation for robustness. Also test it on the 15-minute time frame, because you'll probably find you'll get... mind you, if it's a scalping strategy on M5, then test it. But yeah, if it works, it works. You'll never know. Put an aggressive on the Aussie New Zealand, stop at 200 ADR. Yeah, I'm kind of classing this 2.1 as my aggressive at the moment because I've got this manual that I took. It's taken a second entry too close together, which means that the lot size is way bigger than it should be, which is why I'm getting out, because I've got far too much exposure on this from a lot size perspective. But we have just had a reversal, but it's gone straight into propulsion and they're buying back out of propulsion. So this could well be the banks adding into the long. And if it is, you want to be in it. But if it is exhaustion and we are going to pull back on that leg, I can just about get out before we hit support. In which case I will take it because I want to close this Aussie New Zealand so I can switch over to the new EA on it, really. But this is a bit of a mess, this trade, because I got the trades are all over the place. It's one of those that just get into a mess every now and again. You have to dig yourself out of it. Again, backtesting doesn't show the messes. Things go wrong in the real world. Been out of the live since January, new EA. Yeah, position trader EA. If you've got the market reversal alerts EA, you don't really need it. The position trader EA is kind of, in my opinion, an enhancement of the market reversal alerts EA. It doesn't use market reversal alerts at all, which is why it's called the position trader EA. It's got nothing to do with market reversal alerts. It is just for position trading, and you can position trade any strategy with it. So it's got buttons. So if you are on an instrument that you want to place a trade on, there's one that I haven't got a trade on. So Euro New Zealand, if I'm looking at Euro New Zealand and I'm using a strategy where I get in on propulsion bounces, for example, and it pushes up into there and I see it pull back down and close below that level, I can hit that button and it will turn the trade automatically into a position trade for me. But the entry can be absolutely anything you want. You can use any indicator you like, any signal you like, and it will just, but you take the manual trade. So you can basically, all those strategies, the idea behind this is to simplify it, because people get so confused with the market reversal alerts EA. There's so many moving parts. There's so many filters. There's so much. It's very hard to use, admittedly. I know it is. This is simple. Yeah. The inputs for it are, do you want to trade ADR or RSI? You select one of those. And if you want to trade ADR, what level do you want? If you want to trade RSI, what level do you want? How do you want to scale in? How do you want to get out? That's it. Simple. If you don't want to do those two, you set it into button trading mode and basically you just trade. You don't even have to set it into button trading mode. You just basically press the buttons and get in when you want. If you want to use a Bollinger Band, get in. It's fine. But all these strategies that you've looked at in the past, there's like the one that David's just said about. There's a load of strategies out there that I've looked at in the past, which were really good strategies for a short period of time. And I thought they were good, and then they went wrong, and I dumped them. Same as everybody else. I system hopped for years. All of those strategies, you can revisit those and go, what if I just remove the thing that made it bad, the stop loss? Why does it keep failing? Because it kept stopping out all the time, right? So what if the entry criteria was pretty good? It just couldn't quite get the entry right. What if I turned all those into position trades? You can. This will do that for you, and it will just scale in and adjust the price that you enter at for you automatically using position trading methodology. So it's just, if you've got the market reversal alerts EA though, it's very similar, yeah. But if some people have got the market reversal alerts EA have also grabbed this because they want the flexibility that this gives. And I can't add buttons into the market reversal alerts EA. It will just stop working. So overloaded with crap. And it doesn't use magic numbers, which is a godsend. I can just basically go, yeah, short that, and it will just pick up and go, oh, I know you're in trades here. This is where your next short's going to be, and that's the lot size we're going to use for you because that's the last thing you did with it. It knows everything. It's clever. Finally. I'm only trade 6 pairs on FX at the moment. Trading, don't trade the Swiss. Yeah. Let's do RHST now on the live. What? I don't know what that means. David, thanks for the $5. I missed that. Sorry. Thank you. I've just got through the chat. $5. Thank you very much. Do you know what? That pays for one glass of wine I had last night. Do you realise how expensive wine is when you go out now? Very expensive. Thank you very much. Very much appreciated. $5. I like. Afternoon, Chucks. Well, let's start getting those YouTube earnings up. Yes. No, I'm never going to earn enough money out of that. SNB's Chairman Jordan, we are not afraid to use the, there we go, balance sheet measures if needed. .axpx. What? Oh, was that a link to the, right, okay. That was a link to the news event, was it? Right. Yeah. So yeah, basically they're basically saying the Swissies, you know, don't mess with us, which we know because they screw us around all the time. A la today. But anyway, the quant analyzer. I'd have, yeah, I can't do that now because I'd need to find my accounts. No, I need to export them. I'll do that. I will do that. I might post that in Discord as well. The difference between the results. In fact, what I might do is I could use this account and see what the difference would have been on this account, because I've taken quite a few Swissy and yen trades on this one as well. Cheers for giving the rundown. I'm sure you've probably explained it 3,000 times in the last 2 months. Yeah, and there's a video on it as well. There you go. I don't know why that didn't load, but there's a video which explains basically explains how it works. You know, the usual stuff I do video-wise. Yeah, I'm not going to run down everything today. There's no point in going through everything. We've got another news event coming up at 1:30 this afternoon, which is the PMIs. Once that's out of the way, we go basically into retail sales for the pound tomorrow, and Powell speaking tomorrow afternoon, half an hour ahead of market open. So we've obviously had FOMC this week, so Powell isn't going to say anything, I don't think, that is going to trump what was said in the press conference last night, which was very little. So that I don't think we need to worry about. Retail sales for the pound is probably not going to do an awful lot. We might get a bit of a pop off of it if we get a positive figure, but I don't think that's going to do an awful lot either. So that's pretty much it for news this week. As I said on Monday, it was going to be the week from hell, and it certainly has been. Biggest loss I've had ever, basically, caused by that Swiss move. So that's over now, that news week, and obviously today was the big day for that. Moving into next week, we calmed down a lot. We've got very little news next week at all, and we've got obviously bank holidays coming up as well, so I'm not obviously around next Friday because it's Easter, but we've got bank holidays starting to kick in, and the news is all disappeared. So next week we should see normal market movement resume, which is going to be very much up, down, up, down, up, down as usual. Yeah, so the usual stuff while we're sitting waiting for the next news event, which is going to deliver absolutely no information about whether or not we're going to change interest rates. So it should hopefully be back to normal next week. Wait, I forgot, it's Poke the Bear Thursday. Is it Thursday? Why has it got to be Thursday? We don't have to have Poke the Bear Thursday. Why do we have to have Poke the Bear any day? I've had enough poking today from the Swiss National Bank. Thank you very much. They've done their poking. I'm fed up with being poked. But anyway, we'll see. So yeah, these Swissies, I don't know what we're going to do with them. I really don't. I really can't see that getting back down there. But who knows? Who knows? So far, they haven't continued the move, have they? So We'll see if they do, but not really convinced by this Swiss move. If anybody's got anything specific they want to look at, let me know. We can have a look at any pairs that you want to look at. But if it's Swiss franc related, I don't know. If it's anything else related, then obviously we can look at it. But this is a good example here. Look, this is the last Euro Swiss entry that I had. That was also that was the ADR entry, the first ADR entry on the Euro Swiss. So you can see what's happened to it. Literally, we've just had a month, 2 weeks sideways, 2 weeks sideways, just getting gradually squeezed. And then, boom, absolute kick in the backside, basically. That's Swissy. But it may all come crashing down again. Like Jordan said, they also have a button like the Japanese that they can press. And they can also send you down there. So it may happen. Right. If anyone's got anything to look at, I will be back tomorrow. So tomorrow's live room is going to be in the morning. We've got pound retail sales figures tomorrow. That's it. We haven't got anything else. S&P 500, haven't got the S&P 500. And I only trade intraday on the S&P and indices. So yeah, 8 o'clock tomorrow morning, we've got pound retail and forex. Just we'll look at everything that's happened, but I don't think really there's going to be much point in doing a massive analysis tomorrow because we'll be waiting to see what happens with the yen and the Swiss. So if we do get some movement off the pound, fantastic. But as you can see at the moment, it's sort of continuing this downward momentum that we've had off the back of that news, but it's not really, is it? Look, it's not really going anywhere. So I wouldn't expect much off the pound tomorrow. But so we'll run through anything that's extended and have a look at it. But I don't think there's going to be much point in doing much analysis tomorrow because the key at the moment is still what's going on with the yen. And now we've got the Swissy thrown in as well. So we will see. Pound odd, we can look at pound odd. Oh, one pound odd, there we go. So I've just got first long on pound odd off these lows. So this is your 2 week low, last week's low, and 3 week low, all in this area. We are basically bouncing back out of this area now. RSI extension to the downside, so looking for that. And TP for me is going to be back up in that propulsion gap. Not that high. So just watching those lows there, roughly halfway into that propulsion move as a TP. Entry MA9 close above on 15-minute chart, around 193. I'm already in it. I've had my entry this morning. That one. You had a reversal alert this morning as well. Look. So that would have been your entry on the reversal alert. That was my entry on the MA entry. But obviously, your broker may have different data. So your moving average, you know, it's like with everything. You know, an MA cross, a reversal alert. You know, people have said to me, you know, in the live room before, I've said I've just got in on that reversal alert, and other people have gone, I haven't got a reversal alert there because their broker had that candle there was red instead of green because they closed it 2 pips lower than my broker. The difference of that candle makes the difference whether that is an entry or not an entry. Yeah, same with moving averages, same with RSIs. Yeah, your RSI, mine at the moment shows 37.8. Yours might show 37.74. Yeah, if the trigger is 38 to get in, for example, and yours shows 37.95 and mine shows 38.01, I'm getting in a trade and you're not. This is why you trade your charts. And whether or not an entry is taken because of 1 pip difference or anything. It doesn't really matter, does it? Like I keep saying, it's not about the entry. It's about how you manage the trade after the entries happened. Because regardless of how you get in, it's either going to go up or down, isn't it? So, but yeah, I'm in that one already. And it's a good support area as well. So hopefully this is a W pattern formation. We're going to pop up into that propulsion. But could be looking, obviously, return back up to top of the range. There's no reason why at the moment we should break down. But if we do break down, that is where the second entry would be. Something else as well, which I haven't covered in the video, but with the new position trader EA, and you can see obviously the reason it puts this next long on the chart, and it shows visually where the next entry criteria has got to be. You can adjust this on the fly. So, for example, if we look at this particular entry here, so the next long trade is going to be taken when price is pushed down below that level and we get a signal to go long. You can see that there's a fairly good monthly support there as well. Yeah. So that would be a good level, obviously, to take a second entry at. But if you found that this next long line was below that level, for example, you can change this on the fly, which is a really cool little feature of the new EA. So let's say, for example, I wanted to move that up or down. What you can do is just go into here and change this to be 1, for example. And now it's got to get down to there. So if in the bootcamp, the way that I teach position trading in the bootcamp is that you get into your initial trade and then you look for areas of support and resistance to add to the position. The market reversal alerts EA, we converted over into using ADR because obviously we wanted to scale in, but we didn't want to be too tight. We didn't want to be too far away. So we used an ADR level. But with this one, you can actually now say, actually, with this particular instrument right now, I want it to be entering when we've gone beyond that level. And then once that trade is taken, you can look at the chart and see where the next entry is going to be. And then you can just adjust it again and go, actually, right now, so I want the next trade to be 0.75. And you can make this next entry level fall in line with support resistance. So you don't have to scale in at the same distance for every instrument. Also, on every trade within each position on an individual instrument, you could adjust that. So you can basically, it's almost like dragging this line down. You can adjust it using that input. You'd have to do this on your VPS, obviously, unless you're trading just on chart. But I mean, most people are using a VPS. But yeah, so it's just another little cool feature that I haven't covered in the video, but it's one of the things that I think I will personally use, because if the next entry line was here, for example, and I saw a support there, I would go, well, I don't really want to get in there. I'd much rather get in on a bounce down there. So let's move the line down a little bit. Pretty cool. So you can adjust it. Just see if there's another something else that I'm in that New Zealand CAD. That's probably a good example. Yeah, so New Zealand CAD. So got long on this one. I'm in long at the moment. The next entry on this one is going to be here, which is actually a pretty good level, isn't it? Yeah. But if you look at it, look, it's actually not a good level. I'll take that back. So this low here is a monthly low. And you can see that the next long is pretty much on that line. That's a little bit tight, isn't it? So what price has got to do is it's got to get beyond that level to take a trade. So what I might want to do in this particular case is go, actually, in this case, I'm going to move it to 0.6 because I want that line to be a bit higher up. Wait for it to tick. There we go. So now what's going to happen is it's going to go beyond that line, hit that level, and then bounce. But it wouldn't have particularly taken a trade if that line was directly on it, because price has got to open below and close above. Yeah, so you can adjust it. And that's a prime example of where you would probably want to move it a little bit closer just to make sure you get that trade on that bounce and you don't miss it. But yeah, good tool I'm probably going to use and utilize. And it's just a case of quickly logging into your VPS and just tweaking it. God, it's not even ticking New Zealand CAD. Look, hasn't moved the line. There we go. That's a slow market. There we go. So yeah, so I'd point that out. Just did a download from my FX book, and it looks like half my trades are more than half my trades, and more than half my profit is on the yen and the Swiss. There you go. They are extremely profitable instruments because they move. This is the trouble, isn't it? It's the quandary we all face. Like I said at the beginning of the stream, a lot of people, when the Swiss franc peg was removed in 2014, swore blind they would never trade the Swiss franc again. My mentor at the time said exactly the same thing. 2 years later, he was back trading it, as we all were, because it turned into a normal currency. But they are renowned for doing what they did today. So from a position trading perspective, it's one of the dangerous currencies, but also incredibly profitable because it moves. It's an individual. You've just got to think about it. Yeah. One thing that might be a good thing to try is take it out of your portfolio for a month or a quarter and get used to not having it. See how you get on. If you get withdrawal symptoms, you can always add it back in. But the thing that worries me about the Swiss franc at the moment is what they've done today is potentially set a precedence for interest rate moves moving forward. Yeah. So we are moving into, from June, we've been through the 18-month interest rate hike out the back of COVID. We've been stagnant now for a good 6 months, and we're moving into the interest rate drop cycle. This will last 18 months, 2 years. I don't want to be going through what we went through today with the Swiss franc for the next 18 months. On the way up, it was no problem because everything was moving together. On the way down, the Swiss has gone before the US dollar and it hasn't got far to go. So that's what worries me. We're moving into an interest rate drop cycle, and I don't know, not very confident in the Swiss after what they did today. That's exactly how I've been using that setting as well. Also placing alerts. And if I fancy it, manually hit the buy or sell button on support resistance. Yeah, exactly. This is partly why I've built this, because my main prop strategy that I used on prop was support resistance. That was it. It was 1 hour support resistance bounce. That was it. That was all I was doing on prop. Using stops beyond support, half an ADR, and getting out with some profit. Because on prop, I didn't need to have a risk reward ratio. I didn't need to have anything. I just needed to make $8,000. That was my job. They wanted me to make 8%, so I did. So I would get in with whatever percent and say, right, if it goes beyond that level, if it doesn't, I'll take some money. There was no logic to the strategy. So, yeah. Support resistance, we know, works very well. Pound US dollar 125 ADR. Looks like the pound is still getting hammered. Shouldn't have got out of that pound US dollar short, but US dollar rallying. Going to get out the US dollar Swiss today as well, by the looks of things. I want this month to be over. But mind you, that's all on a 0.2% risk over 1 ADR. So by removing all of them and having 0.4 ADR risk on the rest, it stands to reason you'd have the same returns. Yeah. Swiss falling again, is it? This will be the second leg coming in. This is the flag potentially this is the start of the flag break. If it breaks, yeah, if this is going to be a flag break, you're going to just going to run. The other thing, obviously, with what you've said there about removing them and increasing risk, you could always just keep one in your portfolio. So just trade, probably not the US dollar yen, one of the yen crossed with Swiss yen. There you go. Just trade the Swiss yen. So your only exposure on the Swiss is the Swiss yen. Both safe haven currencies. Both will rally at the same time, meaning neither of them will give you a massive spike, because if there's a safe haven run, the yen will rally and the Swiss will rally. Therefore, the Swiss yen will do that. That would be your solution. So trade the Swiss yen. Both got really low interest rates, so the swap will be tiny. Have I got any Swiss yen on? 20th of March to the 21st of March, $13 swap. Oh, swap's not good on that either, is it? The Swiss yen. There you go. Your solution is to trade the Swiss yen, but only long it. Then you get a positive swap as well. Or just dump it, you know, I don't know. Just expose yourself to the Swiss and yen once. Yeah, if you do that, you know, it's all about exposure at the end of the day. You know, the more exposure you've got on one currency, if that currency goes against you, the more harm you're going to have. I've been burnt on the hedging account with the pound Swiss and the euro Swiss. I've been burnt on the ADR account with the pound Swiss, euro Swiss. I've been burnt on this account with the US dollar Swiss. Yeah. There's 5 exposures there. Aussie dollar Swiss on this one as well. There's 6 exposures on the Swiss franc there that I've had in the wrong direction at the end of the squeeze with a news spike. Yeah. If I just traded one, I'd still be hurt, but I'd be half as hurt. Yeah. Instead of taking the 20k odd loss, it'd have been a 10k odd loss. Big difference. No, 50%. But then again, the returns would be 50% smaller. Horses for courses, isn't it? There's always a payout and a give and a take, isn't there? Right. I am disappearing now. So anybody needs anything, let me know. Other than that, I will be back tomorrow morning at 8 o'clock. And we will obviously have a look at how this Swissie's played out for the rest of the day, and the yen, more importantly. That's what I'm going to be keeping a close eye on today, and seeing if we get that continuation rally on the US dollar yen. It doesn't look like we're going to, and we've got the news coming up in about 5 or 6 minutes. If that moves it, brilliant. If it doesn't, we'll have a look at it tomorrow and see where we're going. All right, so have a good day. Anybody needs anything, I'll be in Discord and Telegram. Other than that, see you next time. Have a good one.